Good day everyone. Today, I'll be discussing the topic items not considered passive income subject to final tax. First, when we say passive income, it usually refers to earnings such as interest, dividends, royalties, prices, and other income that may be subject to final tax. When we say final tax, it means the tax is already withheld, so the taxpayer does not need to include it again in the regular income tax computation. However, there are certain items that are not considered passive income subject to final tax. Instead, this may be subject to regular income tax or other forms of taxation. These items include number 1, interest income from personal loans and trade notes. Interest earned from personal loans or trade notes, whether from sources inside or outside the Philippines, is not subject to final tax. Number 2, interest income from bank deposits held abroad. If a person earns interest from money deposit in bank outside the Philippines, it is not considered passive income subject to final tax. Number 3, royalty income with source outside the Philippines. Royalties earned from foreign sources are not subject to final tax under this category. Number 4, prices not exceeding 10,000. Small prices amounting to 10,000 or below are not subject to final tax and are usually included in taxable income. Number 5, winnings from PCSO and Lotto. Certain winnings from Lotto or PCSO are treated differently depending on the tax law applicable. Number 6, dividends from foreign corporation. Cash or property dividends received from foreign corporations are not subject to final tax under passive income rules. Number 7, share in the profit of a general professional partnership. Income received by a partner from a professional partnership is not subject to final tax. Number 8, capital gains from sale of shares of stock. Income from selling shares of stock, whether traded or not, is subject to capital gains tax or stock transaction tax, not final tax on passive income. 9, capital gains from sale of real property. Gain from selling real property is taxed separately under capital gains tax. Understanding these exclusions is important because taxpayers need to know which income should be included in regular tax computation and which are taxed separately. To get the taxable income, you need to add this: 50,000 plus 70,000 plus 25,000 plus 800,000 is equal to 945,000. That's the gross income. 945,000 minus 200 is equals to 745,000. The net income. 745,000 minus 250 is equals to 495,000. That's the taxable income. To get the total income to final tax is 80,000 divided by 80 is equal to 100,000. 100,000 plus 30,000 plus 20,000 is equals to 150,000. So to get the basic income tax, 22,000 plus 19,000 equals to 41,000. That's the basic income tax. To get the final tax paid is 20,000 plus 3,000 plus 2,000 equals to 25,000. That's the final tax paid on passive income. That's all. Thank you.